Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's February 14th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So it was my oldest daughter's birthday a few days ago. She just turned 10 years old. Double digits, man. Crazy. And she asked for only one present from me. Only one. And it was to spend the entire day with her dad. Now, I don't care how tough you try to be as a guy, or how much weight you lift, or how many people you beat up in your life. Daughters just make you a mush bag. I mean, the worst part, they know it. I mean, they kind of know they own you. They have the palm of your hand, you know? It's kind of funny. But I really thought that was awesome. That was her. That's all she wanted. No toys, no nothing. Just, hey, Dad, I want to spend the whole day with you. There's no way I was saying no. Made the whole plan, planned out the whole day. It was great. And we hung out. This was a few days ago. So went through everything that I wanted to do. I wanted to surprise her with a lot of things. And the first thing was I was going to take her roller skating. I know roller skating, you know, thinking that my back is bad, but hey, it's my daughter. I want to take a roller skating. It'll be fine. I'll be okay. Then I was going to go to a place called Adventure Landing. That place has miniature golf. They have go-karts, rock climbing, really fun. I've been to several Adventure Landings. They have like 3 or 4 of them out here. And then I was going to surprise her and take her on a helicopter ride in my personal helicopter. I'm just kidding. I wish I had a personal helicopter. But they have these tours that you can see Jacksonville and the city and the beaches, and it's for like 20 minutes, only like $150. I said, you know what? Something she'll remember. I think it'll be really cool. And you know, I'll probably bring it to dinner after that, where my wife and youngest daughter would meet us. We'll have a birthday cake, have some fun, and you know, she'll be able to open up those presents. Yes, my mom and her mom and myself actually bought her gifts, even though she didn't really want them. But of course, we have to buy her something, which is really cool. So everything planned, right? Perfect day. But I forgot something. And it was really important. I had a mental relapse. And I forgot that we live in Florida. I really did. I forgot. So I went to go take a roller skating. It was closed, even though it said the place was open on their website. So I said, you know what? Let's try ice skating. Drive 15 minutes to the ice skating rink. And they say there's only open skating for 2 hours of the 12 hours, and it doesn't start for another like 5 hours from now, right? Again, nothing on their website. So I'm talking to the girl and said, listen, you know, it's my daughter's birthday. There's no one on the ice. There's nobody there, right? I was like, can we just go on the ice for a little while? No, we can't do it. I was like, why not? She's like, we just can't do it. I was like, you know, the ice is empty. There's nobody here. She's like a robot. Like, you know, skating's closed to the public. We just can't. I could have gave this girl $10,000 and she just would have repeated the whole time. No, I can't do it. I can't do it. Like, there's nothing. Like in New York, you could be like, come on here. I'll give you, you know, whatever. Here's a couple of bucks. Could I just hang out with my daughter? They'd be like, okay, quick, do it fast. Florida, nope. They just program like a robot. No, we can't do it. So, all right, fine. So then I want to take her to go on a helicopter ride. Go on a website, says it's open all day. Get personal tours. Just call us. All you do is call us. I said, all right, sure, no problem, right? So I give them a call, and I get an answer machine. On the answer machine, it says, please leave a message. We'll get right back to you. I said, hi, my name's Frank. I want to take my daughter on a helicopter ride. I can come anytime. I'm about 15 minutes away. Can you call me back? And gave my cell phone number. And again, they said they're going to call me right back. That was 4 days ago. Still haven't heard back from them. Right? So now I'm starting to feel bad. I was in the car. Because everything is closed. I wanted to have a great day planned for my daughter. And my daughter's just such a good kid. She's like, Dad, thanks so much for spending the day with me. It's okay if everything's closed. And I feel terrible. And I'm like, babes, don't worry about it. It's going to be the best day of your life. Trust me, right? So I just put like a ton of pressure on myself because I can't even think of anything what to do. So my next stop is Adventure Landing. I'm like, okay, miniature golf, go-karts. We'll have some fun. We'll hang out. We get there. There's like nobody in the place. It almost looks like it's closed. Walk in, and I said, hey, how you doing? You guys are open? She's like, yeah, we're open. I said, okay, can we, go on a go-kart? She's like, it's closed. It's not available. The track is wet from yesterday, and we closed the track. Mind you, it's 75 degrees out. My daughter and I are in shorts. The ground's completely dry, but they closed the track. Okay, fine. No idea why. We did manage to play one round of miniature golf. And then we went to go play arcade games, right? Because I have a big arcade there. And I'm not kidding here. There's like 50 games. 35 of them were broken. They're all on. The lights are on, but they have tape on the slot, so it's just not working. And whatever, the 15 or so that were working or didn't have tape on the slots, 5 of those took our money, and we couldn't even get it back, and the games didn't work. So I actually called the go. It's like, none of the games work. I called like 3 times. Can you give us our money back? It was like game after game after game. And I was telling them, I was like, look, does anything work in this place? And you're just letting it go. It's like ridiculous. And the girl just sits there. And she looks at me like I'm the crazy one. Like, you have this whole place open. None of the games work. You don't have the go-karts. Nothing's working. I'm sitting there going like, what? Why are you even open for? Like, this is insane. Not to mention that these games reward you in tickets, right? And the most any game paid out in tickets was 100 tickets. So if you get like the jackpot, it's 100 tickets. And they had like these 30 prizes. I don't know if you ever went to Dave & Buster's. I don't get to a point here. Yeah, they have all the 30 prizes, including a big stuffed gorilla, right? So first, a big stuffed gorilla. And it has a sign on it that says 13,000 tickets to get this gorilla. And again, the machine's there, the highest payout is like 100. So I'd have to spend like $2,000 to get enough tickets to buy this gorilla, which costs probably $60 on Amazon. It's besides the point. So my daughter looks at me. She's like, you know what? Let's just get out of here. It's fine. So then I decided to take it to a gun range. The legal age to shoot guns in Florida is 6. I know this might sound crazy to a lot of you. It sounds a little crazy to me. I'm from New York, right? Guns aren't legal. Florida, everyone has guns. And the last thing I want to do is, maybe she goes over one's friend's house. There's a gun left out. Seriously, so many people in Florida own guns. It's insane. So I was thinking, well, maybe we could take a class about it. She could shoot a couple guns. It'd be really cool. And she was excited. We go in there again. The legal age is 6. We walk in. The guy says, you have to be 12 years old to shoot here. That's just our policy. And he's like, you could shoot and your daughter can stay out here, and I'll watch her. And I'm like, really? I just met you 1 minute ago and you're going to watch my daughter and in a gun range? Okay, no, that's not going to happen. So that's 5 places, right? So this is a true story, guys. I know it's going to get long here, but listen to me, right? 5 places in 2 hours that I plan to spend a considerable amount of time with my daughter, and they're all closed because people hate to work in Florida. I'm not sure why I forgot that all of a sudden. I mean, that's my fault. That's on me. But eventually we did find a really cool place. It has these trampolines everywhere, basketball courts. You could jump on them. These big pits of foam you jump in, and they have dodgeball. They also have the Ninja Warrior obstacle course. I mean, things that are crazy hard, not the best thing for your back, but it was fun. And then we wound up taking her, at least I took her to Toys R Us and told her to pick out a few things, which, she was like, Dad, it's okay. You don't have to buy me anything. I understand. Again, she's just being so nice. And I was going to spend a ton of money on everything anyway, so I bought her a couple of presents. But just amazing, right? Like 5 places that you want to take your daughter at. And on our websites, most of them are like, we're open. The other ones didn't even say anything. And you go to them, almost every single one of them was closed. And Adventure Landing, which wasn't closed, which is terrible, turned out that everything was broken. Nothing was really open anyway. We did meet out with a mom and sister. Had a great dinner, a lot of fun. But I told her, and this is pretty cool, because I always said, in me growing up in life, there's always 2 ways of looking at things, because sometimes the most terrible times can actually be the best times, depending on how you look at them. Because if we went roller skating, ice skating, everything, Adventure Landing, she probably wouldn't remember the birthday 10 years from now. I mean, I don't even remember her birthday from last year, really, what we did. But now we always have this memory of how Florida is just a strange place in the world where people hate to work, how everything was closed on your 10th birthday. We both laughed, had fun. It turned out to be a really, really cool day. But, man, sorry to rant. Sorry to go on with the long story there. But holy cow. You take the day. It's nice. You're with your daughter, and all that stuff was absolutely closed. Guys, if you're thinking of opening up a business, if you're thinking of doing something, do it in Florida. Because if you work hard, you'll make an absolute fortune here. Because, man, it's just amazing. I don't know why I forgot. My fault. Anyway, I was able to save the day with my daughter, and it was really, really cool. Sorry for the long story. Again, I use this as therapy because I get to vent to you guys, which is cool. And now we're going to get to the fun stuff, because I have an awesome, awesome podcast for you today. Includes a great interview with Nate Flanders. First-time guest. Now, you never heard of him, but Nate is a professional cryptocurrency trader. Something he's been doing for years when there was only like 1 or 2 trading platforms. I mean, he's been talking about Bitcoin since 2010, 2011. He's been really trading for the last 3-4 years. He's made a lot of money doing this. Also lost money sometimes as well. He also co-founded a very successful company called DBet, which had their ICO last year. You don't hear that often, a successful ICO. Yes, you probably hear it and you know the top 10, but there's thousands of them out there that are pretty much worthless. So it's a pretty big achievement that you could say, wow, you know what? We had an ICO with a really cool company and it's working out. It's great, generating money. It's having a lot of fun. He was a big, big part of that, one of the co-founders. Now, as you know, crypto's pretty insane market. I mentioned earlier, listen, I know people who made a fortune also know that a lot of people who have lost a lot of money. It's dangerous. It's very high risk, but very high reward. And I wanted to put a professional trader in front of you because I get so many questions about cryptocurrencies, trading. Frank, I want to get into this market. Again, it's not everybody, but I've gotten a ton of questions on this. I know some people like the dividend ones and like different analysts, but this is going to be a really cool interview because it's hard to get guys like this on podcasts, especially in the cryptocurrency world, because the guys who are legit really don't do a lot of interviews and do things, and the guys who are not want to have their face painted everywhere all over the place. That's how you know if people are real or not. And it's the same in the industry too. When you don't, guys who are great have a tough time marketing themselves to people who are not great, who would market themselves like crazy. It's just weird the way the market works like that. So here we have Nate coming on, going to explain everything to you when it comes to strategies, managing risk, what to look for in these currencies, since it's an incredibly new market where we're learning something every single day. And still, most people do not understand what platform to use. How do you actually trade? What could I do with this? There's a million things, and a lot of these platforms are just not really that good right now. And he's going to be able to, stay in the right direction and show you exactly how it does and give you some great, great strategy. So awesome interview coming up, because I'll tell you one thing about Nate. He doesn't sugarcoat things and tells it how it is. Moving on. Going to have a great educational segment for you. I'm going to break down fourth quarter earnings, which earnings season is almost finished. Almost the whole S&P 500 report. You still have small caps reporting, though, over the next week or two. This is going to be a very, very important segment that I promise will lead to tons of new ideas for you. And it's probably going to change the mind of anyone who thinks that we're in another credit crisis right now, or what we saw in 2008 and 2009. Just trust me, it's a segment you don't want to miss. It's going to be filled with statistics, filled with data, filled with a lot of education. But wait till you hear the numbers and actually what's going on under the hood of earnings. And it's funny because I'm going to show you where you can get all this information absolutely for free. Now, before we get to the educational segment, let's get to my interview. The expert cryptocurrency trader, Nate Flanders. So, Nate Flanders, thanks so much for joining me on the podcast.
Thanks for having me, man. I'm excited to be here.
Well, I would say I think I know you for pretty close to 3 years now, and you've been talking about Bitcoin to me the whole entire time, and like an idiot, I didn't listen. But not only have you been talking about it, you've really been invested in it. You've really been trading it. What made you actually get into this industry? Talk about the whole thing, because now you're seeing over the past 6 months or so, everybody wants in on this industry. They want to trade. They want to learn about cryptocurrencies. What made you so interested in it 3 years ago?
Well, originally it was around 2010, end of 2010, early 2011. I was selling software with a partner in Australia, and he was big into building mining rigs. And unfortunately, I thought it was getting in the way of business, selling software, and I didn't get involved then. Around 2016, middle of 2016, I really started exploring crypto, Bitcoin primarily, and then started learning more about these alternate currencies coming out as a business solution for their projects. And that's about around the time I started getting really vested and interested in learning more and becoming more involved with it.
Now, this is, I want to say, probably a year ago, maybe 2 months ago, because I want to cover this first, where you were a big part of a company called DBet, one of the early people there. And the timing was perfect. Why did that work so well when I talk to you? When I see so many ICOs, I read so many white papers. I mean, here you had DBet, and it's something that came out, you ICO'd it, and it was very successful. Could you talk about that process? Because right now we're seeing a process where when you launch this thing, maybe you had like 40, 50 of these things. Now there's hundreds, maybe even 1,000 of these things coming out, and everyone who basically is a programmer or knows just a little bit of that technology who's in this industry just wants to raise money for an ICO, and they barely have a business plan.
Right. So with Decent Bet in particular, we were seeing this happen often in the market. Exactly what you said. People were just launching ICOs, raising tons of capital, millions and millions of dollars, basically on an idea. Obviously there's not much regulation there, and a lot of people were getting taken advantage of. The group of guys that I was with starting DBET, amazing group of people, and they always keep the people in mind first. So with DBET coming along, we focused primarily on having a product before we went to ICO, kind of to instill that trust, as well as building a massive community just through direct contact through our groups and our personal influencers that were a part of the team. I think what set us differently from the others was really just the trust and the product pre-ICO.
And talk about that product, which is actually pretty cool.
So it's actually, DecentBet is an online casino that utilizes blockchain technology to remove one of the factors in the gambling industry, which is obviously trust in online casinos. What's unique about our casino is we allow anyone in the world to own a piece of the casino. By that is where our token utility came into play. So anyone who holds DBET tokens, they can either gamble with them on our platform, or they can stake them in the house per quarter. Then 100% of our profits made by the casino are actually redistributed back to anyone who was involved in the house.
Which is kind of interesting, right, Nate? Because when I look, I mean, you basically have an ICO and you raise money on a platform that exists, right? Compared to today, where, I mean, I am going to say it because it's very important that my audience knows this, listeners know this, that I've probably had at least 20 companies now have come to me and just, again, we're interested in this. We're getting very into it within Curzio research. And I'm reading their white paper, and they're saying everything that they're going to do. Well, we're going to do this. We're going to they don't understand right. Programmers are for this, right, to build blockchain, but we're going to do this, and we're going to disrupt the advertiser. But they have no platform. They have nothing. I mean, you actually have a platform. I would say 95% of the companies out there with ICOs and raising money, they just have like a white paper. They don't have anything going on, right?
Right, exactly. So that was kind of a goal with DBET and this market, to help protect or educate people when they go to invest in ICOs, is to really look and see if they have something developed, if they funded their project pre-ICO, how those funds, and if it's not entirely done, at least maybe a beta project or product that people can use. So the idea was kind of to create a standard, so to speak, in this unstandardized market by bringing a product to the people at ICO, unlike every other ICO we see. We actually did a ton of research, and we were the first company to come to ICO with a fully working alpha product.
No, that's great. And you can see why it was successful. And I wanted you to cover that too, because there's so much risk out there. I think everybody just wants to get into the next ICO. Most of them don't work. There's thousands of them right now, and it's very dangerous. But it's nice to see why yours work, where you had an actual platform where, hey, this is what you're investing in. Here it is. Now, I want to talk to you, and I'm going to get to the trading part in a minute. I want to talk to you about the volatility we're seeing in cryptocurrencies, because as you know, if you pull up any website, you're going to see someone say Bitcoin's going to 1 million, and the next headline right below it says Bitcoin's going to 0. So, right. For us, we laugh at that. But in all seriousness, when you're looking at investors, they're saying, wow, I really want to learn more about this industry because blockchain's for real. I mean, isn't it technology that's disruptive? If you don't think it's disruptive, guys, every financial company is investing in it. There's thousands of companies investing in it because it disrupts the foundation that their businesses were built on. So, I mean, it's absolutely real. So, but when you look at Bitcoin fluctuating, you hear all these comments and read all these crazy stories. What's your thoughts on what's going on now, where we just saw, I mean, you could argue that, wow, this was a big crash in Bitcoin, but it's actually pushing back up 9,300 today, but it's up tremendously even over the past 5 months. Yeah.
So, I think the fear that we see posted in media, at least about the volatility, is maybe spawns from the unknown, really, that we haven't seen an asset this bullish, I don't think, in any market ever, really, that happened in this amount of time. These corrections that we see, or people like to call them crashes, are very technical pullbacks. They're hitting zones that experienced traders, can see, way down the road. But I think what happens is a lot of the people coming into crypto, they don't really have a background in trading or investing or really how markets work. And that's where the fear, I think, is generated primarily.
All right, so and that's going to be a good segue to trading cryptocurrencies. And I wanted to have you on because I'm getting tons of questions, not from everybody. I know this might be an interview. People say, well, you can get more conservative in dividend stocks, but I want to touch because the amount of questions that we get on this and the amount of moves that you're seeing in some of these cryptocurrencies where it could really create millionaires in a matter of weeks, but also what people aren't telling you that a lot of people get crushed as well because they don't know what they're doing. So you have become a trader. I know you have a Facebook group that I'm going to go over with later. You post a lot of those trades and charts for free and stuff like that. You've used a ton of platforms, made money in this sector. Why don't you talk about, I guess, what are some of the biggest mistakes people do? Because they want to say, okay, I want to become a cryptocurrency trader. Just overnight, they say this, right? And they go onto these platforms, which are very, very, they're not user-friendly at all, right? But what are some of the mistakes that they're making that they don't understand? Because it seems like they're in trouble right off the start without really understanding these markets.
So you have new people onboarding that want to get into trading, and I think what attracts them most are these 1,000% gains, that people are seeing, which are very nice when you luck out and jump into one of those, but it doesn't happen as often as you would think getting into crypto. A lot of mistakes that I see people coming in is being blinded by that excitement, and usually that excitement is at the top of a market. When normally you would see a market pull back. So they're throwing money at the tip of any, let's say, Bitcoin or any alternate currency that they are getting involved with, and then it turns into panic because that was probably right at the parabolic tip of any investment, especially when these people are coming in from excitement. And I see a lot of disappointment coming when their investment drops 50%, or 60%. A lot of that also, the mistakes come from risk management in trading. Trading, since I got really involved and have spent a lot of time studying and become pretty good at reading the markets, the biggest thing is risk management, and you can't learn it overnight. A lot of emotion comes into play. If people could learn to manage all of their trades and eliminate their emotions, I think a lot of people would be a lot more satisfied, and take small losses and re-enter in different positions that are more ideal, and patience, But a lot of these platforms, they don't allow people really to educate themselves easily through their platform and really help people understand risk management and how volatile these markets are. So.
Yeah, and I want to get to the platforms, but what you're saying is absolutely right. And guys, listen, it sounds easy to say, right? Don't get your emotions involved. Nate, you've had your emotions involved, I guarantee it. I've had my emotions involved. Every professional trader that says that, they say, well, you got to keep your emotions involved. We all do, right? We're all human. And a good example is this of how a program is, a friend of mine told me this story about his mother when the market was going higher. And this is 4 or 5 months ago. And it's been going higher for a while. But he said, you should look to get into stocks. You haven't been in stocks, get into the portfolio, and she's like, it's too high. I wish it would come down. It seems like it goes up all the time. So now we had this pullback, and he went back to it and said, well, now you want to invest? She's like, no, I'm not going to invest. I'm scared to invest. So that's a perfect example of how we all react, right? We're all like that. And to keep your emotions on the side, it's not always easy, right? Because you have your money involved in these situations. You want to try to maximize your gains. But I'm so glad you talked about risk management, because it just seems like in this industry, everybody wants to talk about the 5,000%. This guy's a millionaire and all this, but nobody talks about that most people get killed in this industry because they have no risk management. It's very dangerous. Now, you brought up something good, which is very important, because when you started trading, there was a few platforms. Now there's a lot of platforms, but there's a big flaw in all these platforms, because the people that are going to come into this industry, or maybe people that are trading on an E-Trade account, a Ameritrade account, a Fidelity account, they have amazing tools there. They make it easy. They could show you how to do things. You were telling me there's not a platform out there that actually teaches these people how to trade or makes it easy. It's just incredibly difficult. Could you explain that a little further?
Yeah, so the platform's available now, especially with the volumes happening in crypto, billions of dollars coming through. These platforms, they're in traditional trade jargon, in my opinion, and a lot of the people coming into crypto don't understand how to use those tools. And when they try to learn to use the tools, the exchanges are offering zero support. There's nothing in plain English for new investors. There's no explanations for risk management. There's no suggestions through the way of placing a trade itself. People jump in and all they do is buy. And when it drops, they missed out on that opportunity for managing that risk. I always try and tell people to, since there are no tools available, the groups that do follow our trades and things, and our advice is to trade like a casino operates. It's funny that it's kind of ironic. I'm with Decent Bet, but trading kind of goes the same way. The best traders, they trade exactly how a casino would operate for their profits. It's risking 1 for 2. So your risk management would be the 1 and your profit would be the 2. A lot of people get really greedy only because they're unaware, uneducated, or have lack of support in trading from these exchanges altogether.
Now, when you trade, I mean, you showed me charts, and it just looks like technical analysis, like you would trade anything, any stock on a stock exchange. It's kind of the same thing that you're doing here, where you're seeing different price levels, but you seem like you would see more of that in this industry, where we're not really seeing, especially from technical analysis guys. Look, you guys know I'm a fundamental analyst. I probably use about 10% technical, and there's people that use 100% technicals, right? But this is a market that, with technical analysis, is huge, especially based on the huge volatility, where you're able to spot a lot of points sometimes that can get you out of things, and also points that, hey, things that are breaking out. I just think it's much more important because there's not too much fundamentals in this industry. How do you do it in some of the indicators and things that you're looking at? You don't have to get too specific, but I just think it's interesting when you send me these charts and tell me, hey, Frank, keep an eye on this currency or this ICO or this and that. Yeah.
Yeah, definitely. So I really appreciate crypto because it trades so technically. Fundamentals are important, but the fundamental side is really just hype, I think, in this market, because most of the cryptocurrencies don't have a physical product. So these people are releasing maybe news, and that's where we see primarily the 1,000% runs, or these 500 times gains. That falls under the fundamentals. There's so few far in between. Every single day, however, these coins can be traded extremely technically, almost to the T, using technical analysis, more so than you would see in Forex or traditional stocks.
I want you to talk about, getting back to the part where, because you have an idea that you're really trying to get the right people involved of starting another platform. And, it's very early stages. Nothing's there yet. But I just want you to explain that, because for me, I think that's a great idea where you see new people come into these trading platforms. And, I know you know almost all of them, but the fact that they don't have the tools and the trades and just learning stuff of how, hey, this is how you have to do it. Here's how simple it is. And it's still so difficult, even at this stage. It seems like a good idea for someone to come out with a really good, simple platform that really teaches people how to do this stuff.
Right. Yeah. So without going into too much detail, we're working on a really big project, and the goal is to disrupt this entire exchange industry in crypto. We have a large group of people, almost 100,000 people, and we see it every day that they're just struggling, and they're running down rabbit holes, trying to teach themselves or learn and not getting great advice, or getting 100 variations of advice, ultimately creating too much emotion in them. And the platforms don't cater to, like we mentioned earlier, that the training or the advice or just the assistance in plain English. So our project is aimed to change all of that, making the boundaries of entry to this market and trading and investing, because people come in and that's what they want to do. They want to trade. They want to make these gains. People want to make a living trading. So we want to empower people to be able to do that with some very unique tools and strategies that'll be available on this platform.
No, that's pretty cool, man. And I want to end with this because you mentioned the Facebook group, right? And it's funny when you say Facebook groups, and I think if there's moms listening to this, they have the mom Facebook group, but you actually have. You've been in the cryptocurrencies for such a long time. You started this group with a bunch of buddies, and it's one of the most like credible groups out there when it comes to cryptos. To the part where I think it's over 100,000 members, but 100,000 people there. But you don't allow anybody just to come in where there's no promoters or no crazy stuff, and it basically evolved to something that it's really a credible. Hey, these are the people that believe in this. This is real. This isn't hype. This is people that want to learn, and this group keeps getting bigger and bigger. It seems like it's become one of the biggest groups of Facebook when it comes to crypto.
Yeah, absolutely. It's pretty exciting actually. Myself and three good friends that I actually just met through crypto when I started getting really involved in private chat groups, just talking about different positions and trades we can make. We were involved with some other community groups on Facebook where people can collaborate and chat back and forth about the markets. But they were just being operated poorly. A lot of things were getting shilled to the community. It really just became what felt like a spam group. And it really didn't keep the vision of blockchain in mind, or like the vision of this massive adoption that we're going to be falling into, which we're falling into right now. So we started our own group early 2017, just the four of us. And now at this point, we're just shy of 100,000 members. And our data is showing about 80,000 of those people are active every 30 days. We vet everyone that comes in. So now we have a team of about 30 moderators that we brought on to assist with moderating the group and everything. So we try and keep everything laser focused. We don't try and shill any services or anything like that to our community. We keep the community in mind. And it's really proven that that's the way to do it in crypto, and it's all about lending a hand, and everybody's learning this, myself being involved as long as I can. It changes every day. Crypto's like a practice. So it's really come to be an incredible group online.
No, that's great stuff. And Nate, if my listeners want to learn more about it, I mean, how could they do it? I don't know if I don't want tens of thousands of people going into the Facebook groups. I don't even know who they are. But
and we welcome
some places
everybody.
They could go?
I mean, everybody. Mm-hmm. So just on Facebook, the group is called Crypto Coin Trader. We call it CCT for short. But if you were to search for it, it's Crypto Coin Trader, and then you can request to join the group. And then every day our moderators go through, usually very quickly, and approve and deny new members coming in. And the ones that get denied, generally out of the rip, are what we kind of have determined are most likely spam accounts. And usually those accounts are made in 2018 or late 2017. They don't have a profile picture. So if you've had a Facebook account for a while, 99% chance you're going to get approved to join. And it usually happens within minutes after requesting to join. So anybody is more than welcome to join. We welcome everybody that wants to learn with open arms, really. So.
Nah, it's great stuff, man. I always love when my guests provide free stuff and tools that they can learn. So, Nate, listen, I really appreciate you coming on, man, because as you know, it's more and more people are getting involved in this space. I love the fact that we're seeing it come down hard where, when it was 19,000, you got all the million, it's going to 1,000,000, 40,000 next year, and then it comes down. You guys, you got to be careful. It is a real market. It is great, but there's a lot of speculation going on. There's a lot of craziness. And maybe one last question for you, Nate, here, which is important because what we're seeing here is more regulation coming to the space, and I've argued that this is a great thing. It's like the marijuana industry, and even a press that we just hired, Barry Cohen, who's a crypto genius. He's just someone who's an amazing analyst of this industry. But even he was saying that when you see an industry and it becomes regulated, it becomes legit now, right? So, but yet it's going to curb back a lot of the BS that's out there. Do you see this as a positive or negative? Because it's being seen as a negative with the price early on. But I think if this is going to be long term, you have to regulate this a little bit, right?
Yeah, so for me, regulation, it's kind of a double-edged sword. I really appreciate regulation in the aspect of protecting people that are getting involved. Especially with the type of investors we're seeing coming on, completely new investors, but the other side of the regulation is it's only temporary, I believe. It's such an unregulated market. Then we start having these massive countries come through, and they notice that when these countries, when they announce any bad news, it's almost intentional to me, because then the following week it's, oh yeah, no, by the way, we're not going to be regulating anything serious or banning, cryptocurrency in our country. And I think on that side of it, I don't appreciate it, but the regulation on the pro would be good to protect people from getting involved with, for example, ICOs that don't have a product or aren't accredited with their government agency or haven't complied in one way or the other, which in my eyes is taking advantage of the people investing. So if that can be eliminated, that would be incredible. And I think we're on the right path to do so. Just recently, the SEC hearing that we heard, it was actually a pretty positive sentiment from the SEC, and I could agree with a lot of what they were trying to do in that aspect. The other end would be over-regulation, in particular, and a situation we're dealing with the project we're working on in the United States is the licensing required for what we want to do on our digital asset exchange is kind of archaic, and there's no modern process to comply, especially with blockchain being so progressive. I hope that aspect of it changes, where they're more accepting to allow companies in the States, at least, to comply easier without having to go through the traditional rhetoric of licensing and being compliant.
No, it definitely makes sense. So, Nate, I guess we'll leave it there, man. I know you didn't hold anything back. It wasn't like, hey, you got to invest in crypto, everybody. It's great. You really highlighted a lot of risk. But you could tell you really want to help people, and you're a believer in this trend, and that's really cool. That's going to go a long way. So good luck with all your projects and stuff. And I really appreciate you coming on, buddy.
Thank you so much for having me. It was I'm happy to do it. So.
All right, man. I'll talk to you soon.
Awesome. Thank you very much. Bye.
I always say this podcast is about you, not about me, and I mean it. Got a ton of questions on cryptocurrencies and trading, so I wanted to bring on, a really good guest for you. Someone's going to help you experience really cool. Someone that's not going to say, you got to get in this, got to get in this market. It's great. I mean, it's almost like he was talking people out of it a little bit. Like say, if you want to learn, here's what we're going to do. And he's really trying to create this whole platform and do an ICO. And I think that's going to be a few months from now. It's a major project and stuff. And I'm glad he's trying to do something like that, because it's really going to help a lot of investors who have trouble. I mean, most people heard of Bitcoin these days, but if you ask how many people own Bitcoin or own a cryptocurrency, man, hardly anyone owns it. So, you think like this trend is over and everybody knows about it. It's crazy. I mean, look, you're seeing Bitcoin move up now, which is surprising. What didn't it break 6,000 like a week ago or so, and it's 9,300. So everyone's like, oh, it's going to zero on the way down. Then on the way up, it's going to 1 million. So for me, I just want to put, people in front of you that are just going to tell you the real deal and say, guys, listen, if you want to do this, here's how you do it. If not, then don't do it. It's risky. Again, I want to try to help you guys make money. And look, this is an industry where be very, very careful. It's incredibly risky, but the returns in some of these things could be life-changing. So it's worth it for speculative money. Don't put money, that you're going to use to buy a house or your kid's college or anything. But, it's 1-2% of assets is definitely worth it, because that 2% can grow into 15-20% of your asset base if you pick the right cryptocurrency stock. And it could be very, very quick too. And I know it's kind of like going to a casino. People love that. Investors, smart investors, I want to invest in the long term. I get it, over a long period of time. But the short-term gains of thousands of percent are definitely still there. And, for me, I want to try to provide as much help for you to get those gains, to try to get those gains with as little risk as possible. And that's by putting the best people in front of you, which we're doing with Barry Cohen, which we just hired, and also Nate Flanders. Hopefully he'll be doing some stuff with our company as well, helping you guys out. He's a very, very good friend. And he's just he's really cool and willing to help us out any which way. And I'm glad he came on. Let me know what you think about that interview. Frank at CurzioResearch.com. That's Frank at CurzioResearch.com. Let me know if you liked it, if you didn't like it. But again, this podcast is about you, not about me. And you guys were asking for something like that, and I wanted to give it to you, and hopefully you guys liked it. Now, let's get to my educational segment. Markets stabilizing a little bit. A lot of you have been writing it as well, nervous about these huge 500 to 800 intraday swings in the Dow over the past couple weeks. Can't blame you for being nervous. It's crazy out there. But now you see a lot of calm to the markets. Earnings season almost over. I put out alerts to my subscribers saying this pullback's normal. Did videos, got a lot of heat for it, right? Because a couple of our stocks have fallen, and people are like, well, your stocks are down, this and that. I'm kind of trying to tell people, follow your stops, don't panic. This is just like a regular correction. And what are we seeing happen here, right? Because corrections happen all the time. They've happened for 37 straight years. Corrections at 10% pullback from it. They're highs. It happened every single year, but it didn't happen in 2017. The previous 37 years it happened, but not in 2017. And 75% of the time over that 37-year period, when the markets pulled back, 75% of the times they ended the year higher. So again, this is normal. It's like taking a breather. It's like running a sprint, or you're running and you just dialing back a little bit to take a breather. Like, okay, catch your breath, and then you want to keep going at a normal pace. I mean, that's what the market, and we didn't see that. We just saw it running full speed for every month in 2017. First time ever happened that we finished. The S&P finished higher at the end of the month, every single month, 12 for 12. And then you can go 13 for 13 to January before we saw this correction in February. And everybody gets nervous because the last major pullback and was the credit crisis. Holy cow, it's going to happen again. And my job is just to be real with you. I'm not a perma bull or a perma bear, but just saying, hey, guys, look, relax. All right. Yeah, we have a couple stocks. You've seen fluctuations, especially small cap portfolios. But a lot of these things are coming back very, very strongly now. And this is something that I was telling you about that's probably going to happen. And here's why. Because when I look at the data, and especially when it comes to earnings, right? So you look at the economy, we saw inflation number come out today, which is really high. And then, the market fell. And then before recovering, it's kind of hard to explain, to be honest with you, because the Fed wants to do everything it can to inflate the economy. That's what they're trying to do. And people are nervous. Why? Because if you see higher inflation, that means they're going to raise interest rates faster. And usually, not all the time, the data shows not all the time, that the market doesn't perform that well during as interest rates are rising. And actually, there's periods where the market has soared when interest rates are rising, actually. So that means it's going to be harder to take out debt. You're not going to see as much spending. It's higher interest payments. So, you almost have, when you have easy money policy where you have zero interest rates, people are spending like crazy. They're able to borrow at low rates and go crazy and buy houses with, mortgage at 5% when they used to be 18, 20%. If, you're 65 years old, listen to this, you know exactly what I'm talking about. But on the flip side of that, when you're raising rates, it's kind of telling you that the economy is pretty solid right now, that we can afford to raise rates. And I know the market comes down a little bit and you say it's weird. So are high interest rates good or bad for the market? It's actually telling us that the underlying economy is pretty strong. And if it wasn't, the Fed will reverse course just like they did, in 2000, I think it was 2006, 2007, they were kind of raising rates into the credit crisis and immediate reverse course. But the fact that they're raising rates, is it a negative for – yeah, it's a slight negative, but it's telling you that, hey, you know what? The economy is on pretty solid footing right now. We're getting that inflation. People are spending money. Wage growth is growing. It's not the worst thing if we control inflation, if it doesn't run away, which is dangerous because usually when we inflate the markets, what happens? It's like pushing a train. It's impossible. And once you get to that hill and you push it, once it starts going downhill, that's inflation. Once it starts going down that hill, it's very, very difficult to stop, and it doesn't happen quickly. So that's why people probably believe, or the market's saying, wow, we're going to have a lot of rate increases, which could be bad for the market. But it's actually not really terrible for the market. It really isn't. It's just telling you that, hey, you know what? We got this market inflated. People are doing good. Jobs are doing good. And I want to go over the data, which is the most important when it comes to earnings. Okay. Now, if you go to Google and you put in FactSet earnings and hit enter, it's going to come up with FactSet an earnings insight report. That's the name of it, earnings insight. And it's for free. And it's a PDF. And it gets updated probably every 7 to 10 days or so. All right. So updates you on the S&P 500 earnings, all the companies that reported. It gives you amazing, amazing stats. And by the way, FactSet has one of the best research platforms, but they do a great job providing the detailed analysis on earnings every quarter, not just giving you numbers and things. It's they track at every company, break down the reports into sectors, which companies are beating on earnings and sales, which ones got a higher or lower for next quarter, even the following year, what the total earnings for all the S&P 500 companies combined is going to be, which is important. So that allows you to figure out the PE ratio, guys, on the S&P 500, as well as the forward PE, since it tracks guidance. So how would you figure that out? Well, if you divide the price of the S&P 500, go look at the price of the S&P 500, and divide it by the total earnings of all the S&P 500 companies, so it's the total earnings combined, which is $132 for 2017. That's pretty accurate because this is fourth quarter. Most of the companies reported. It's like 80%, pretty close to 80% now. So it's going to be around 130. It's 132, but it's going to be, that's almost a figure that you could use. I mean, maybe it'll be 133 or 131, but 132. I mean, most of the companies reported. So if you divide the S&P by 132, the S&P 500 index by 132, what do you get? The S&P 500 is trading at 20 times earnings, right? Now, that's the past 12 months. And if you look at that metric on a standalone basis, you're going to say, holy cow, man, that sounds really expensive. And it is. You're looking at an average PE of around 16 times over the past 5 years. That's the average. We're trading at 20 right now. The average over the past 10 years is more like 14 and a half. But before you run out and sell all your stocks, there's a lot more to the story. Get to the FactSet report. Absolutely free, guys. Right? Just go into Google, plug it in, and read that report. It's 28 pages. It's remarkable that they're giving this away free. 28 pages. It's awesome. When you look under the hood, and this report is from February 8th, right? If you look under the hood, there's a lot of positives here. Because anyone that believes the pullback that we just had is more than your typical correction, which is normal, that we experience every year, or thinks the markets are in big trouble and you have to sell anything, you're probably going to think differently after this segment. And here we go. Close to 75% of the companies in the S&P 500 reported so far. It's probably about 85% now. Again, I told you it's from February 8th, so it's a few days old. 70% of the companies are reported, right? You have, out of those, 75 reported positive earnings surprises, right? That's close to, it's a little bit high. It's around 69, 70% is the average. So 75% of these companies that reported thus far had positive earnings surprises. That just means they beat earnings estimates. So when you take that as a whole, right, you have to look at different things, right? So you want to measure overall growth and what's going on. If you look at earnings could always be manipulated, right? But if you want to look at a measure of growth, one of them could be sales. Of course, you want to look at free cash flow, which works. But you can look at sales as well. I mean, if you're looking at earnings can be manipulated, 100 different ways. You can recognize revenue at different time periods. You could use different measures of accounting. You could buy back tons of shares, which artificially inflates your earnings, which basically will allow you to meet consensus estimates from quarter to quarter. You know, a lot of companies have been doing that. Doesn't mean you're seeing strong demand. It's all manipulation. But you could find ways to lower your tax rates in between quarters sometimes. I mean, I could spend an entire podcast on this alone, on how companies can manipulate earnings, and they do it legally. But when it comes to sales, this has been one of the biggest drags on companies dating back pretty much for the last 5 years. Look at that. Most companies are seeing negative sales growth year over year from around 2015, definitely through 2016 into 2017. But the negative sales growth, it was like 7 quarters in a row, and we still had slow sales growth through 2017, the early stage of 2017. And now we're looking at the past few quarters, and we're seeing sales really, really pick up. Surprising. But you look at sales, and then you go back to earnings, and most companies, have been using buybacks to help inflate their earnings, and I get it. But when I look at sales specifically, and for those of you analysts out there who really, look at the details, of course, retailers can show huge sales growth by discounting items. That's how they get old inventory off their shelves. That's going to result in lower margins and lower earnings. So your sales could increase while your earnings are lower. But remember, we're seeing some of the strongest earnings growth from S&P 500 companies since the credit crisis. I mean, 3 straight quarters of double-digit growth. This quarter, they're growing at 14%. They're expected to grow at 18% next quarter and more than 15% for the entire year, for 2018. And it's important you realize this because it's not a one-time measure. It's not like, oh, Frank, well, the tax cuts. It's artificial. It's not artificial. The corporate tax rate went down from 38.9% to 21%. And yeah, you can say, well, companies weren't really paying 30%. Maybe they're paying like an average of 25, 26. But the tax rate is lower following December's tax reforms. So earnings are very, very strong. So you can't look at the past earnings because that didn't include the tax cuts. So it's very important that earnings are growing. And getting back to sales, sales are growing on average for these companies at 8%. That's the highest since 2011. More importantly, nearly 80% of the companies that reported thus far, remember I said it's around 70% S&P 500, reported higher than expected sales. 80%. Guys, that's the highest percentage, the highest number that's ever been since FactSet has been tracking this data going back to 2008. So you're seeing strong sales growth, and it's not strong sales when we're getting rid of inventory because you're seeing the underlying earnings very, very strong. I'm hoping I'm not throwing too much stats at you. I'm trying to make these things interesting. What you need to know is sales growth is off the charts, which is happening for the first time in over 10 years. And it's not manipulation because you're seeing growth in earnings. You're seeing strong growth in earnings. It's not you're seeing sales going up, earnings lower, they're getting rid of inventory, whatever. You're not seeing that. Now, another interesting stat, companies that have reported positive earnings surprises for the quarter, right? You would think automatically, wow, they've reported positive earnings surprises. Frank, if that's the case, why did some of your stocks get hit after they reported earnings? Which is true. Well, if you look at the whole market, even though these companies reported positive earnings surprises, raised their guidance, the average price decreased almost 2%. And they include that from the 2 days prior to the earnings release, 2 days after. So that 4-day period of reporting earnings, even though they report strong earnings, the stock declined. Why? Because they're a little ahead of themselves right now. Right? Got a little crazy there. When you go up for 13 straight months in a row, the first time in history, it gets a little ahead of itself. So we're seeing a normal pullback. This is normal. Now, a few important points here, and please, hopefully, send me an email, frankcurzioresearch.com. If it's too many numbers, I want you to go back and listen to this because it's important, and it's going to make you money, and it's going to make you feel more confident about the stocks in your portfolio. Earnings growth and sales growth is going to continue at least for another 3 to 4 quarters. And it's not being fueled just by demand in America, but demand overseas, where companies who generate more than 50% of their sales internationally, and this is S&P 500 companies, they're growing sales more than 10% compared to companies that generate more than 50% of sales domestically, right? So the domestic companies are growing their sales by 7%. So if you have an international presence, you're growing even faster. It's not an American story. It's a global story, guys. It's global. And yes, this is being fueled by tax reforms. I mean, this is real cash coming on the balance sheets of companies. I mentioned earlier, the market is trading at 20 times earnings the past 12 months. That should worry you. The average is usually 16 times over the past 5 years. That was pre-tax reforms. So let's look at 2018 because total earnings for the S&P 500 are projected to surge from $132 to $157. Remember, that's the total earnings combined if you put all S&P 500 companies together. 157. So if you're looking at 157, you're like, wow, that's so inflated. But this is based on what companies just told us this week, right? We reported fourth quarter 2017, and they give full year guidance. So you have the analysts updating their numbers. You have the companies updating their numbers. They could be different. Some people cannot believe, analysts may not believe the company and say, well, it's going to be higher or lower than what we think you're saying. But these are numbers just given to us right now. This is the projections for 2018. So based on that 157, if we use the 157 number, the S&P 500 is trading at 16 and a half times earnings. Okay, the 5-year average multiple is 16. We're trading right at it. So in other words, if you think the market's crazy expensive right now and is going to crash, you pretty much had to think the same exact thing over the past 5 years because it's trading at the same multiple. But you wouldn't know that because you're reading all these headlines and I'm reading these headlines and you're seeing, oh, the market's going to crash. It's crazy. It's overvalued. If earnings go higher along with the market and prices, it still could be cheap even though it's going higher. And that's what we're seeing here. And I'm not sugarcoating these numbers. You know, I'm not a perma bull or a perma bear. I mean, I thought the market was going to fall before we got tax reforms, but this is a huge deal. It's not a one-time tax cut, although the next administration could change policy, but it'll probably be a death sentence for them considering, and what did Apple come out and say, over $300 billion they're going to spend in America now? How many companies gave away bonuses to the employees because of the tax cut? You're really going to go in the next administration, I don't care if it's Republican, whatever, you're going to reverse that? Good luck. Because you won't get elected the next term. So what do we have here? Again, lots of numbers. Please follow me. It's important because I know a lot of you are nervous about the markets, and this is why I'm telling you why you don't need to be nervous. Because earnings are soaring right now. We have an economy where things are good. We have a banking system where banks are forced to keep tons of capital on their balance sheets. It's not the credit crisis. They're not leveraged through the roof and crazy. They're not allowed to be. They're being monitored by the Fed. It's insane. They want to lend more. I couldn't even get a loan for a second house, even though I had enough cash to purchase it 4 times over. They wouldn't lend me the money because they're not allowed to, because of regulation. So now we have earnings growing at 14% year over year and expected to grow 18% next quarter. Every sector of the market is reporting earnings growth. Every single sector. Every sector that they cover. There's like 13 of them. And based on these earnings, the forward PE for the S&P 500 is just 16.5. So I get you worried. I know the market's all over the place. The volatility is crazy. I know the Credit Suisse inverse VIX thing was nuts, showing that the market should crash. I get it. It's been suspended. There's people coming out, whistleblowers and all that stuff, and you're hearing all the freaking fear guys come out. I understand. When you have perma bears and they've been wrong for 7-8 years, once something like this happens, they all come out, man. Every one of them, they all come out. They're like, what is it, cicadas that come out like every, 17 years? They all come out. Oh, right now, it's everywhere. You're seeing everything, nervous, fear, it sells. They want you to purchase their products. That's why they try to scare the hell out of you. They're like, the market's going to crash, but buy my newsletter. And it's a long-only newsletter. A little ironic. So don't be surprised that the market's rebounding right now. It's already recouped more than half of their gains from the lows. And again, I'm not saying the markets won't remain volatile or we can't fall another 10% from here, but it's not a credit crisis, guys. You don't have to run to the hills. You don't have to go buy a cave. You don't have to buy, just store everything and go to Walmart, buy extra water, and the world's going to end. And do me a favor, please, 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 if you can, stop watching TV, because those same people who told you to run for cover are now telling you to buy the stock market today. It's the same guys. We're going to a lot of pain ahead. We're in big trouble. Holy cow. The same guys are saying today, oh, the market's good. We're seeing stabilization here. It looks great. It was 4 days ago. You told me to buy a helmet. We're going to die. Pretty amazing stuff. All the chaos, all the craziness, and the S&P 500 is actually up on the year. So guys, start looking for stocks. A lot of them are depressed. We've seen a couple in our portfolio fall to levels that are ridiculous, and one of them just popped 20% in 2 days. You're seeing a lot of these things rebound. There's algorithms that click in that once you see a 3, 4, 5% decline, you're going to see a 15% decline. And even on the upside, the stock that goes up 3, 4, 5% will be up 17%. A lot of algorithms trading. It's crazy. But try to find those good names that have fallen that are still down 15, 20%. And you might get in at really, really good prices, because right now it's starting to stabilize. We're not expensive on the market. There is going to be volatility. So it doesn't mean you have to go out and buy those stocks that you like. Put them on a watch list. They come down 10%, purchase them. These are some of the strategies I'm doing right now. I'm doing for my portfolios. I'm letting my subscribers know exactly what I'm doing. Okay, guys, be sure to check out my Curzio Research Facebook page. I'm posting updates for you, including one today. Just posted a live video. 2 last notes here. If you're a CRA member, which is Curzio Research Advisory, my newsletter comes out the second Wednesday of every month, which is today. But it's going to come out tomorrow, not today. Not because I'm lazy, but it's a big crypto stock issue. I'm recommending 3 crypto stocks. Okay, not ICOs, but crypto stocks, plays on blockchain, data mining. Did a ton of homework on this, consulted a lot of my great contacts in this industry. It's a fantastic issue. One of those companies is reporting after the close. I wanted to get a little bit more data on it. And it's been a crazy volatile market where the last thing I want to do is you're getting an issue the same time when a company reports, and after they report, it could be up or down 10%. If it's up 10%, you're going to be pissed because it's a little bit of a buy-up to price. And if it comes down 10%, you're going to be like, should I buy it here? So I wanted to get the numbers. I wanted to get everything straight, but they actually were supposed to report 2 days ago, and they pushed it off to today after the close. Once I see those numbers, I'm going to break them down for you, update the numbers in the newsletter, and then I will send you the issue tomorrow after the close. But I want to do that for you. That's why I am suspending it for 1 day or just pushing it, delaying it for 1 day. So CRA members, Curzio Research Advisory members, you're going to get my issue tomorrow after the close. The second thing is, I want to say this, and I mean it. I love you guys. Hundreds of emails came in wishing my wife the best. I told you that she's a breast cancer survivor. She found a lump in one of her breasts, and we were very worried last week. And I said, hey, I'm not the most religious person, but if you want to say a prayer, hundreds of emails poured in, which is really, really cool. It's very scary. I know you guys said a lot of prayers for us, and we just got really, really good news that it's not cancerous. So really happy, and I just really, really appreciate it. And I just wanted to thank all of you because I started showing my wife those emails. It's a little depressing. I was like, hey, see, it's pretty cool. And it was funny because she said, I can't believe these people who don't know me are saying prayers for me. And I said, they actually do know you, and they're like family. And I really mean that. So really great news, guys. And I'm excited. I'm excited for 2018. I'm pumped. It's going to be a great year, great picks, lots of new ideas, and really going to kick some ass this year. So I'm very, very excited for subscribers, ready to rock and roll. And it's going to be really cool. And again, once again, thank you for all those emails. I really appreciate it. So that's it for me. Thanks so much for listening. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.